Okay, let's have a look at what's happening on foreign exchange markets at this hour. This is the picture on euro-dollar, 131.42, so pretty flat compared to yesterday's close at least, but we have seen some volatility since the start of the year. Dollar-yen then looks like this at 83.20. Let's get some analysis now. Mario Singh, Director of Training and Education at FXprimus.com, joins us now. Mario, thank you very much for coming in and Happy New Year. Tell us what this positive data that we're seeing out of the US and indeed the Eurozone as well means for your FX strategy.
Hi Anna, well the first key thing that came out possibly as a leading indicator towards the jobs report on Friday, what happened yesterday was the ADP report. Now the ADP report for traders worldwide has always been seen as a leading indicator. That number came out at 297,000, which means about close to 3 times more than the median estimate for economists. What that means is that for Friday we are expecting a big number for the NFP as well. That should push the dollar absolutely stronger over the next couple of weeks. I'm seeing euro-dollar dropping. I'm seeing Aussie dollar dropping against the dollar for the next 2 weeks.
Does this do anything to the market's assumptions about the amount of quantitative easing that the Fed is going to do, or do you think that the QE that's planned just goes alongside this improving data?
Well, the most important thing, especially on seasonality for the dollar, especially in January, there's a lot of talk in the market about the January effect. So while the QE2 has kind of subsided a little bit, what's been happening is that traders and fund managers worldwide are kind of like piling on the risk, especially for like fixed income securities when they're getting into risk position for the dollar. So I still do see the US dollar heading a lot stronger in the next 2 weeks.
It's good to see. Given the inflation picture in China, how do you expect authorities to move on the yuan in 2011?
Well, the most immediate thing that it could possibly do really is to still increase the interest rates. Now, bearing in mind that when the PBOC, when they move, and they move literally giving everyone a surprise shock on Christmas Day, when they literally increase exchange rates. Now, what that literally means for all traders worldwide is that when they had increased the repurchase rates for all through in terms of China for the last 6 times in the whole of 2010, it just wasn't enough for them to contain inflation. Now, bearing in mind that inflation came in at 5%, skyrocketing high, China is still going to be increasing interest rates coming into 2011.
Many Asian currencies, central banks are facing that scenario. You mentioned the dollar is expected to be stronger after the data in particular. What will the dollar index do, the DXY? Will it go past 80, and what will that mean for Asian currencies and the yen?
That's a great question. Now, I'm looking at a dollar index. It's about 76. For the last 2 weeks, it's edging up from 76 to about 79. Heading up towards the big number in NFP, I'm expecting about 180,000 jobs to be added. Now, that's going to be about 6 times more than what was added in November. So bearing in mind, I do see the dollar index pushing above 80.
And if it goes above 80, is that an important psychological figure for traders?
Absolutely. What that would mean is that for risk currencies, for euro dollar will be heading downwards. For the Aussie dollar, coupled with the floods that's happening in Australia, will push it downwards.
And where do you see the Aussie going in the wake of these floods?
Well, at least it's going to fall at least another 100 pips. I'm looking about 98.
So Mario, what then is the best currency play for this year?
Well, let's look at it in terms of short-term, long-term. Short-term, at least leading up to the next 1 to 2 months, I see risk currencies like euro dollar and the Aussie dollar possibly heading downwards. But leading up towards the full-blown era for 2011, I see the growth currencies like the Aussie dollar, the Kiwi and the Loonie all heading higher. I'm looking at Aussie dollar at 106 at the end of 2011.
The thing is, though, Mario, I hear you sound pretty negative on the euro, but we've seen some decent data coming out of Europe of late. I mean, yesterday's services PMI, a classic case of 2 very different sections, if you like, of the European story. The periphery still looking weak, but the core carrying things through. And that seems to be, despite all the news coverage that we give the periphery, that does seem to be the main economic driver of the Eurozone.
It was, Anna. Here's another counter story. What just happened in the SNB, the Swiss National Bank, which is literally the central bank for the whole of Switzerland. Now, they came out in full force in the news, and they mentioned that they would reject having the sovereign debt, the Irish bonds, as collateral. What that really means for traders worldwide is literally I'm seeing euro dollar heading downwards. I'm seeing the euro Swiss in particular heading downwards. In fact, I'm calling for euro Swiss to have a short, to sell euro Swiss at 126.50. Now, what that means for all of us is that literally in the whole EU zone, all these sovereign debt problems still will not go away.
All right, we have to leave it there. Looks like we're in for a roller coaster year. Mario Singh, Director, Training and Education at FXPrimus.com. Thank you very much for joining us.